All right, good morning, traders, and welcome to the opening bell. Today is Monday, August 17th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start the day off with you guys, and it's good to be back. I trust that you were in good hands last week with James and Razan, but it's good to be back in the swing of things. So not much has changed, although we've seen some prominent dollar weakness take charge late in the week. That pullback is now testing some pretty major levels, and the Euro's testing resistance. Aussie dollar on that breakout higher, now testing the 618 to the drop off the yearly high, major resistance. So we'll take a quick snapshot of all the US dollar crosses and gold. Do let me know if there's anything you guys want to take a look at. We'll get started in just a moment. All right, great to see everyone in the room. Hey, Latanya, Chandra, good morning to you as well. Daniel, Jermaine, Yana, Latanya already got Maury, Robert, great to see everyone this morning. So here's the DXY, right into the start of the week. This is the monthly opening range low. This is the 38.2 of the advance off the yearly low. Okay, it's also the January objective range high. It's the same support I was talking to you guys before I left at 99.41, 99.49. We're there right now. Here's the 4-hour chart. Okay, we haven't even got a 4-hour candle close below. But if we were to close below this level, my issue with the DXY is just lower is the 200-day moving average now. It's been sneaking up into that slope, and that's basically the 99 level proper. Now, this could be a major zone of inflection. Look back to the weekly charts. Here's DXY in the weekly chart. Okay, here is the 52-week moving average, the objective yearly moving average at 99.03. Here's basic uptrend support right there as well. Momentum is just slipping below 50. That trigger looks like it's given out, and we got the break, but here's your first lateral level. Now you run into slope and the yearly moving average. Add to that the 200-day moving average and downslope support. So that's my concern with the DXY. A close below 99.41 would be near-term continued the bearish bias. This is also the objective monthly opening range low, so that would have us looking for a late month low, but just a little bit lower. Nothing supersedes basic support and resistance, and the 200-day moving average, the 52-week moving average, and 99.03. Both of those converge on the downslope. So be wary of that. That's kind of the risk, and that's the break that would fuel the next major leg lower. You'd be looking at like 98.68. You'd be looking at the objective yearly open. That's 98.23. Excuse me. I'm losing my voice too early in the week. And so both of those levels are the next major objective like plays on the downside. But the first is this 200-day moving average, that upslope and downslope converge there. So that's my concern with the DXY losses at the moment. Now, we've seen repricing, right? Last week while I was gone, we got those CPI figures showing inflation's pretty much in line, getting a little bit, in line with what we want to see, the right direction. The trend is heading in the right direction. The oil market, though, is still in flux. We have no resolution, and things don't be, the 60-day ceasefire actually ends today that the original memorandum had on paper. So that's still in play. All things held constant on the back of that last non-farm payroll release, which was weaker than expected. The interest rate expectations continue to get kicked out. Here's the Fed Fund futures pricing for September. Now it's 69%, almost 70 for a hold in September. My, oh my, how things have changed in just a couple of months. So if you look out to December, the expectation is still that we'll get at least 25 basis points, right? 70%, less than 60 some odd percent that we're going to get at least 25 basis points. But even that's dubious at this point. In my humble opinion, we probably don't get anything, but we'll see. So that's where the interest rate expectation has moved. We've seen the dollar react in kind. We've seen a decline now of what? 2.3, 2.4% off the high. This is your first level to start looking for potential inflection. If we break below that 200, okay, next leg lower, 98.69. But all things held constant, look for potential exhaustion here. Resistance is still 100 spot 15/35, this zone right here, right? Last week before I left, that was our bearish invalidation level. Still kind of is. But the breakout for the bulls to take control would be 177, 100 spot 64. That March high, that 618 extension, that's on the downslope there. So that break is what would be needed to put this thing back in control for the bulls. That's the XY. Euro dollar looks the same on the inverse. The 1618 extension off the low, a little ahead of schedule. It's the same marker we had there last week. That's 1609. Just a bit higher is the 200-day and then the 618. So this thing's even more stacked up. Okay, you're testing upslope resistance right now. Here's the 4-hour chart. There's that 618, 1609. Okay, if we're heading higher on this slope, on this stretch, 1576, look for support there, 1579. Okay, if we break below the August open, the objective monthly open converges today and tomorrow on this upslope, the median line, that would be suggestive that a more significant near-term high is in place and the threat of a larger reversal. But for Euro, the three levels are 1609, the 200-day moving average at 1628, and 1650 is huge, is absolutely critical. That's the level that needs to give way to suggest you go into the yearly open. That's 1745 all the way up here. But it's stacked up for the Euro longs as well. Again, a trade that is suggestive here with today's move of a breakout of the monthly opening range. We need to see the close to confirm that, but nothing supersedes basic support and resistance, and it's stacked. 1609, 1628, 1649. That's the upper end of that zone. Makes sense? Here's Euro, by the way, on the weekly chart, just to remind you again. Here's that 618, 1649. Here's the 52-week, the yearly moving average. Same thing. Same thing. So Euro, immediate upside into this start of the week, might be vulnerable as well. Keep an eye on this trigger on the weekly chart I showed you. This isn't broken yet. All right, so that's Euro. Sterling, my least favored of the lot still. I don't know if this slope is adequate at this point. It's getting kind of messy, guys. So what do I say about this? Look, if we're heading higher on this stretch, 3460 into 3473, that's the yearly open. That's the 618. That's the February low day close. Here's the major pivot that we were watching all year long. You guys know about this level. If we're going higher on this stretch, that would need to hold support. Initial lateral zone of resistance that I've been tracking is 3591 and 3593. We haven't gotten there just yet. Again, that's the 618 off the high. It's the May high, the August highs. Nice pivot in price. Just haven't gotten there yet. Kind of struggling near last month's high. So the British pound, you have employment data on tap Tuesday. You have CPI on tap Wednesday. You have PMI data on tap Friday. From the US, you have also S&P Global PMI figures. So maybe we'll need some event risk or some sort of development to get this thing in motion. All things held constant, you're still constructive above 3460, but near-term resistance isn't too far off. 3592, 3593. Look for reaction there if reached. Most event risk on tap from an economic data standpoint is the UK this week. All right, Aussie dollar. Whoa, boy, that's stretched now. Testing the 618 retracement. I'm going to take you back to the weekly charts real quick to show you this. Here's the same exact chart we've been tracking. Here's that upslope, which broke a couple of months ago, back in June. Here's the recovery we talked about. We're now up 7 out of 8 weeks. That's including this week. And we're now at the first major lateral zone, 71.20 into 71.16. It's the February high close. Nice pivot in price. The 618 of the drop from the yearly high. Former uptrend support turned resistance. We're checking that today, right now. Okay, so the weekly chart is flagging. Whoa, check it out. Major pivot. Watch for a reaction here. The daily chart has us breaking above that slope. But here's the 618 at 71.20. We popped right through it. We registered a high today at 71.29, and then we pulled back. We need to close above this to keep the immediate upside bias in play. Drill down to the 4-hour chart. Whoops. Looks like this. So here's the high, low, high, low, high, low, right off the low. 75% parallel, resistance, resistance, resistance. Again, last week while I was gone, resistance. Here's the breakout. Here's the 618. If we're heading higher on this stretch in Aussie dollar, pullbacks need to be respected at 70.82, 70.83. Bullish invalidation, the level that would invalidate the breakout of that multi-month downtrend that we saw last month, would be a move below 70. 70 to 70.22 is key support. The upslope is there right now. So initial support, if we're heading higher on this stretch, key support for the uptrend off of the June low to remain viable. A break and a close above 71.20 on a closed basis. You're looking for that slope. Right now, you're looking at like 71.60s, but the next major lateral level is 72, right up here. So yet another dollar cross early in the week, right into resistance, euro into resistance, DXY into support. Keep an eye on this. Dollar CAD. Breakdown, testing the 200-day moving average, testing downtrend support, basic slope resistance, a parallel extending off that low. There's the lower parallel. Here's the 50 of the yearly rally. Don't really care about the 50 too much, but you have the May high there as well. And the 200-day moving average. That's why that circle, actually we had it right here. But extend that now, the 200-day moving average is right here as well. So we're testing it as we speak, 38.53. If we close below this on a closed basis, you keep the downside in play for another leg lower. This is the lowest momentum reading that we've gotten since January, and we're in oversold territory. That's what we want to see if the bulls or if the bears have it. However, today, right now, you're testing that 200-day moving average. By the way, on the weekly chart, we're also testing the 52-week moving average this week. We never closed below it. That was the low last week, but we're testing a push below it. So it gives you kind of a sense, if we were to push and maintain this thrust, there's a lot of room to the yearly open. That's 37.24. Okay, so we're testing support right here, right now. Remember, a break of downtrend support can oftentimes be the sharpest part of the drop. This is also now testing a break of the yearly uptrend. So again, we would want to see follow through. This is your first pivot zone. Watch that 200-day moving average for support today. Here's the 4-hour chart. Even the near-term slope we've been tracking off the high. Here's the lower parallel. Boom. This is why we were looking for a reaction right here. It's now also just a bit higher at 38.74 is the objective weekly open. So again, you'd want to see that hold resistance. If we're heading lower on this stretch, we need to close below that 200-day moving average to keep the downside going. The June open is not necessarily an important level, but it also happened to be the June low. Okay, we opened and we just rocketed from there. So watch 37.97 as like a near-term pivot. If we break here, next major level is 37.25 is the objective yearly open. Today's close matters. Key resistance is 39.55 and 39.42. A break above this would suggest a more significant low is in place, potential for a larger recovery. That's both sides of the trade there on dollar CAD, but we're testing a major break here if we push through that 200-day moving average. Make sense? We got CAD CPI earlier today. Didn't really move the markets. Came in maybe a little bit softer from what I saw, but nothing major on the CAD docket this week beyond that. Dollar yen, nothing's changed. Range bound. Don't really have much to discuss here, guys. You guys know how I feel about this trade. Look, 58.57 was support. That's former resistance. That was the 38.2 of the drop off the yearly high. We broke through it right into the start of the week, last week while I was gone. We tested at support twice. So watch support there. The first major lateral level doesn't come until 60.36, 60.73. So if this near-term range breaks higher, that's still like the major level. If we close above this, technically would suggest that something more nefarious is at play, a potential larger rally. Remember, you're testing the resolve of a multilateral coordinated intervention. I don't know what's so appealing on this trade, especially on the back of the last couple of days, but people love the headlines. So that's still major resistance. You'd need to close above or below, the monthly open. That's the 2025 high day close, November high. You're basically looking at like 57.60s to get this thing going. This year's open and the 618, 56.63, 56.66. You need to close below this to get the downside going. We dropped into it twice this month. But that's the close. On a close basis, that would validate you've broken straight up some pretty key levels. There's the close low from back here in May. So still the potential for a little bit crawl higher, but 60, 36, 60, 73 major resistance. That's dollar yen. Dollar Swiss. Okay. Don't see Mesfin in the room here today, but I know you've been tracking this for a while. We're still holding the objective monthly opening range. Here it is. We opened the month, we dropped into, and we registered an August low at 80.56. The January high was 80.41. We highlighted that as key support. We tested it last week, or right into the close, right before I left, as support. And then the rally last week failed at the 25% parallel right there. Resistance, resistance, and we broke lower. So the monthly range is preserved right above the upslope. I want to bring your attention really quick just to the weekly charts, because this thing has been ridiculously clean. I know this looks kind of messy, but if you zoom in, look at that slope, guys. Right? We've been sitting along that upslope for weeks now. So it's crunch time, right above uptrend support. We've been straddling 81, which was a major pivot all last year. We've been straddling that now for 5 weeks. So you drill down to the daily chart, and it kind of just highlights, hey, we need to see a break. Either below 80.41, which is the January high, and the monthly range low to get this thing going. You're looking for 80 proper. The yearly open and 200-day moving average is down here. Or if we breach above the monthly range high, that 25% parallel, it's back up to 82. 82.14 is exactly where we caught the highs. We nailed that last month. That's the pivot break you need to mark resumption of the uptrend. So patience is warranted here on dollar Swiss, but it's contracting within the monthly range still. Makes sense? Hey, Seth says, good morning, Michael. Hope you enjoyed your vacation. Sure did. Awesome memories made. Do you mind looking or running through Kiwi real quick? I've got the bounce at 618 off the yearly high. Thoughts? We're at resistance right now, man. Right now. Yeah, 59.14. I was talking about this in the last webinar. Here's the daily charts. The 618 off the yearly high, you're absolutely right. It's also that swing low from February. The February swing low. You can see really nice pivot here. It's also the April swing high. Name it. That's 59.28. It's 59.14. It's the same level I showed you guys. I haven't changed anything on this. But the 618 gives us that range. We've now probed, and the high registered right in that range. Look, the monthly range high is right here. So this is the break above 59.28 that would validate that and have us looking for a late month high. So Seth, I have Kiwi dollar at resistance right now. So here's the 4-hour chart. Haven't changed anything either as well. Someone must have prompted this because there's that pitchfork off the low. Here's the slope you're looking at on the daily chart. That's this red one. This slope just off the objective, again, low, high, low. It's a little bit of a different gradient, but look at the median line is right here as well. So looking for a pivot, you need to close above 59.28 to keep the upside in play. And there's really a lot of room. Like 59.88 is the close high for May. It's the high day close for May, and it's the June open. That's your first level on the upside if this were to break out. But right now you're testing resistance. Initial support, the monthly open and the weekly open are both at 58.92, excuse me. So that's initial support. If you're heading higher on the stretch, you'd want to see support here and then break above there to mark resumption. The trade remains constructive while within this formation. You understand? So you can go for a test of trend support that could get you even as low as 58.40. It'd still be constructive, but that's the level that you would need to break. The lateral level that gives way, suggesting straight bearish move, the monthly range low, the 200-day moving average, the October 2023 low day close and low week close. Major pivot, 58.11, 58.20. Bears take over below that. Make sense, Seth? Okay, quick look at Kiwi there. So last but not least, just a quick look at gold. We were talking about the yearly open, the 38.2 retracement at 43.04 as support that needed to hold for the uptrend to play. It's exactly where this thing bottomed last week. And here's the recovery. So nothing really changes on gold, okay? So this is the pivot break. This was the first resistance zone. We broke through it right before I left, tested it as support. The major lateral level, Seth says, awesome. Thanks. More than welcome, Seth. Great to see you, sir. The major lateral level on gold now crunches between 45.28 to 45.33. That's your 200-day moving average. That's the high day close from last year. That's also the 618 retracement of the decline off the highs from April. So this is the break that would validate a breakout of that January downtrend. So slope resistance is just a bit higher. You're getting a little bit of a consolidation here. Look, Thursday was an outside day reversal. So it does give you a little bit of an exhaustion threat. Okay. As I always tell you guys, look for a break of that day's range on a closed basis for guidance. If we break that high, that's your next major resistance zone. This is the level the bulls need to clear to really fuel the next major upside move right here. 45.28, 45.33. There's your 200-day moving average. So keep an eye on that, okay? If we're heading higher on this stretch, initial support is 43.66. That's also the Sunday range low, by the way. The median line is right there. You need to stay constructive above 43.04. Anything below this would suggest the threat that there's going to be a bigger washout, but that's kind of what I'm looking at on gold. Questions on gold? All right. Last but not least, I guess just a quick update. I was saying this earlier in the last webinar. I don't really know what to do with this on Bitcoin, guys. The slope we were tracking for the last 4 weeks, 5 weeks, broke last week. But the monthly open, the monthly range low, held for the last 5 days. So what do you do with that? Look, key support, the monthly open is right here at 62,900, essentially 62,888 change. Look, support is 60,711 to 61,244. A break above the highs. You're still looking for 67,322. That's the breakout you need to fuel the next leg of the uptrend. We could validate an amendment to this slope, although it's very, very clean. So I don't want to really mess with this because if the rally fails at that slope resistance, then you're definitely looking for that drive towards 67.11. By the way, that's 2 equal legs off the high. So even if this is just a corrective stance off of that drop, 67.11 would still allot that decline to still be within the corrective range of the broader ascent. So need some clarity here on Bitcoin, but all things held constant, the monthly opening range is still set and in play. Make sense? All right, 7 minutes to spare. Starting off on a good note this week. Stay nimble. As far as the major event risks for the week, you're not really getting much until you get into some PMI figures on Friday. Eurozone, UK, US. I guess tomorrow in overnight trade, watch for employment data out of the UK as the first major event risk for the week. And then we'll pick things up right back here at 9:30 Eastern for another opening bell. Chandra says, thank you. Have a nice day. Same to you. Everyone in the room. See you tomorrow morning. Cheers.